I was scrolling through my phone this morning, and it's just another article about the digital revolution.
Right.
And the imagery is always the same, isn't it?
Mm-hmm.
You see these, like, clouds of data, binary code, brains made of glowing light.
Mm-hmm.
We have this collective idea that the future is just weightless, that it's all software floating around in the ether.
It's the dominant story of our time for sure, that we've sort of decoupled technology from the physical world.
Yeah.
But that's a dangerous blind spot because the cloud isn't actually in the clouds, it's grounded. I mean, literally physically grounded in the earth.
And that is exactly where we're going today. We are going to ignore the software for a bit and look at the actual hardware.
Or the raw materials for the hardware.
Exactly. The stuff that makes the whole AI boom even possible. We're talking about copper. And specifically, we are doing a deep dive into the earnings report for one of the absolute giants, Freeport-McMoRan.
FCX. Yeah, if you want to understand the plumbing of the global economy, you really have to understand this company.
And the timing is just perfect. They released their Q4 2025 earnings report today, January 22nd, 2026. And the vibe on this call, I mean, it was intense.
Oh, it was. You've got copper prices that are just soaring.
Right.
LME prices are, what, about 30% higher now than the 2025 average? It's a full-on bull market.
It is. But what makes this so interesting while we're doing this deep dive, it isn't just the price chart. It's the story inside the company. It's like a tale of two different worlds.
It really is. On one side, you have this legacy mining operation in Indonesia dealing with a massive, terrifying geological failure, a humbling disaster, as they put it.
And then on the other side, right here in the U.S., they are basically turning themselves into a high-tech chemistry company.
Yeah.
They're using heat and special fluids to reinvent how they mine, all to feed these new data centers. So that's our mission today. How does a company navigate a mudslide in a jungle while trying to build the perfect pile in the Arizona desert?
It's that tension, right? The old economy risks meeting new economy innovation head on.
Let's start with that macro picture, because the CEO, Kathleen Quirk, she didn't waste any time. She opened the call talking about the age of artificial intelligence.
Right.
Now, usually when a mining CEO starts talking about AI, my eyes just glaze over. It feels like they're just, pumping the stock with buzzwords.
I get that, but this felt different.
It didn't.
It was different because the data is there to back it up. She referenced that new report from S&P Global, the one projecting that copper demand is set to double by 2040.
Okay, but hold on, double. We've heard these really aggressive projections before. I mean, 5 years ago, it was all about EVs.
Oh, yeah. EVs will eat all the copper.
Exactly. And sure, they use copper, but that hype cycle, it kind of cooled off. Is AI just the new bubble?
That's a fair question, but I think the mechanics are different here. With electric vehicles, it's consumer-driven. It depends on you buying a car.
Right.
With AI, it's infrastructure-dependent. The bottleneck isn't the consumer anymore. It's the grid. It's the data centers themselves.
So every time I type a prompt into a chatbot, I'm actually burning a lot of energy.
A lot of it.
Yeah.
Generative AI needs this massive computational density, which creates incredible heat. And to manage that power and that heat, you need copper. There's just no physical substitute that gives you that kind of conductivity at that price point. You can't build the AI future without red metal. It's that simple.
So is Freeport actually seeing this in their order books? Or is this all still just theory?
No, it's real. They specifically said on the call that their customers in the U.S. are reporting data centers as the biggest source of growth for power cables and building wire right now.
And that's a huge detail, because the rest of the economy is kind of soft.
Yeah.
Housing is down. Auto manufacturing is a bit flat.
Exactly. The AI demand is offsetting the weakness in those traditional sectors. And that's why Freeport actually beat their earnings expectations. They posted an EPS of what, 20.77 cents?
Yeah, versus the $1.28 Wall Street was expecting.
So the market is lifting the boat, even if the boat itself has a few leaks.
Well, let's talk about those leaks, because leaks is, putting it very mildly, we have to talk about Grasberg.
The Grasberg mine in Indonesia, it's their crown jewel. I mean, it's one of the largest copper and gold deposits on the planet.
And back in September of 2025, something went very, very wrong. Kathleen Quirk called it humbling.
And you know what that means.
I do. When a CEO says an event was humbling, they usually mean catastrophic.
It means nature reminded them who is really in charge. And this happened in the Grasberg Black Cave.
Yep.
To get why this is such a nightmare, you have to understand the method. Block cave mining isn't just digging a tunnel. You go deep underground, you undercut a huge body of ore, and you let gravity itself crush it. You're basically inducing a controlled collapse.
So the mountain crushes itself, and you just catch the rocks at the bottom.
In a perfect world, yes. You want these big, chunky rocks falling down into what they call drawbells. But in September, in Production Block 1C, they didn't get rocks, they got a mud flow.
Which just sounds awful. But explain the physics of it. Why is mud so much worse than rock?
Because rock stays put, you can manage it. But wet muck, this fluidized mud, it behaves like a liquid. It rushes, it flows through the draw points with this incredible force, and it just flooded the tunnels in Block 1C.
Wow.
And critically, it took out their eyes.
Their eyes. What does that mean?
They're sensors. Modern mines are heavily automated. They rely on electrical systems, communication networks to monitor everything. The mud rush just destroyed all that electrical infrastructure. So not only is the tunnel full of sludge, they're also flying blind.
That sounds like something out of a horror movie. So how do you even recover from that? Are they just down there with shovels?
It's a huge engineering mobilization. They've been clearing the mud from the adjacent areas. That's Production Blocks 2 and 3. They're about 97% done there.
Okay.
But for Block 1C, the source of the problem, they're not just cleaning. They are isolating it.
Cork mentioned plugs.
Yeah, but don't think of a little cork. These are massive, reinforced concrete hydraulic seals. They have to completely cut off Block 1C from the rest of the mine.
So if it happens again, it's contained.
Exactly. So that if another rush happens, it doesn't flood the active tunnels. They have to guarantee zero connection to any surface water or mud.
It's like triage. You're amputating the infected limb to save the patient.
That's a pretty good way to put it. And it's taking time. They're hoping for a restart in the first half of Q2 2026. They think they can get 85% of the district's production back online by the second half of the year.
But not Block 1C.
No, that area is offline until late 2027, if they ever even go back in.
It just highlights the risk here, doesn't it?
Yeah.
We treat these commodities like they're just numbers on a screen, but getting this stuff out of the earth is violent. It's unpredictable.
It really is. It's a constant battle between engineering control and, well, geological chaos. The mud rush was just chaos winning around.
Okay, so that is the humbling part, the struggle. But I want to pivot now to the other side of the world, and really the other side of the innovation spectrum. Because while Indonesia is digging out of the mud, the U.S. operations are doing something that just sounds like science fiction.
This is the leaching initiative. And I know leaching sounds like something you don't want to happen.
Right, like in your drinking water.
Exactly. But in mining, it is the holy grail of efficiency.
Okay, so the traditional way is you dig up rock, you crush the rock, float it, smelt it. It's incredibly energy heavy.
Inexpensive.
Mm-hmm.
But Freeport has literal mountains of waste rock just sitting around from decades of mining. Rock that had a little copper in it, but not enough to justify putting it through the mill. It was essentially trash.
And now they're turning that trash into cash.
They're using hydrometallurgy. So basically, they treat these giant stockpiles with a chemical solution that percolates down through the rock and dissolves the copper out. But they've leveled up. It's not just spraying water and acid anymore.
They're using heat.
Heat and what they call catalytic additives. They've found that by injecting a heated solution into the pile and managing the airflow, they can speed up the chemical reaction. It's just thermodynamics.
It's like brewing tea. You could do it in the sun, or you can do it with boiling water.
That is a perfect analogy. They generated over $200 million in revenue from this in 2025.
Wow.
They're aiming for $300 million this year in 2026 with a long-term goal of $800 million a year.
And the margin on that has to be incredible.
It's what they call low incremental cost. The rock is already mined. It's just sitting there. You don't need a new pit. You don't need more trucks. You just need some plumbing and good chemistry.
There was this specific term that Corey Stevens, the president of Mining Ops, used that I just loved. He called their new project at the Chino mine the perfect pile.
The perfect pile. It sounds like a bad movie title, but it's actually this fascinating engineering concept.
So break that down for us. What makes a pile of rocks perfect?
Well, just yesterday, January 21st, they started stacking this new pile at Chino. And instead of just dumping rock randomly, they are engineering the geometry of the pile. They're placing sensors inside it as they build. They're installing air injection lines.
Dry the air.
To make sure the bacteria and the chemicals have oxygen to do their work, they are effectively building a massive open-air biochemical reactor.
See, this is the aha moment for me.
Yeah.
We think of mining as hunting. right? You go out, you find the ore, you kill the earth, you take the prize. This feels more like farming.
That's a profound shift, and you're exactly right. It is farming. You are cultivating a resource. You manage the temperature, the pH, the oxygen. And in a world where getting a permit for a new mine can take 15 years, farming your own waste rock is a huge strategic advantage.
And speaking of strategic moves, we have to talk about the robots.
hmm
The Gauls spent a fair bit of time on the Baghdad mine in Arizona.
Baghdad is their big growth engine in the U.S. They're looking at potentially doubling the production capacity there, a 2x expansion.
And the economics of that work out.
They do. They said the project hits its financial targets at $4 copper. With prices well above that right now, it's looking like a green light. The final decision is coming mid-2026.
But the really interesting bit wasn't just the expansion, it was the automation. They converted their entire haul truck fleet at Baghdad to be fully autonomous in 2025. And Kathleen Cork was surprisingly honest about it. She didn't say, it's amazing. She basically said, this has been tough.
She admitted they are not getting exactly what we expected yet. And that's just the reality of AI in the physical world. A robot truck is great, but it doesn't have the intuition of a driver with 20 years of experience.
Right.
It might stop when it sees a weird shadow. It takes corners a little slower. There is a learning curve, and it sounds like they are in the dip of that curve right now.
So why do it? If the human drivers are faster, why spend all that money on robots?
Because the humans aren't there. This is the demographic problem. Kathleen made this point very clearly. It is getting incredibly difficult to find people who want to drive a truck for 12 hours a day in a remote mining camp in Arizona.
So it's not that the robots are taking our jobs.
No.
It's that we don't want the jobs anymore.
Exactly. Automation in the U.S. mining industry isn't a luxury for cost cutting. It's a necessity for operation. If you want to double the size of the Baghdad mine, you physically cannot hire enough humans to run it. You have to make the robots work.
That's a pretty sobering realization. We need the copper for the AI. So we need AI to get the copper because humans won't do the digging anymore.
The cycle just feeds on itself.
Let's talk about the money then, because all of this, the mud, the chemistry, the robots, it all hits the bottom line. And Freeport calls itself America's copper champion.
Which is a bold claim, but it's an accurate one. They produce 70% of the refined copper in the United States. In a world of tariffs and supply chain wars, that is a massive strategic moat.
But the number that just jumped out at me was the leverage, the sensitivity of their earnings to the price of copper.
It is staggering. They laid out the math on the call. For every 10-cent increase in the price of copper, Freeport generates an extra $415 million in EBITDA.
Wait, let me get that right. 10 cents. A dime.
A dime.
That is just wild operating leverage.
It's because their costs are largely fixed. Once you've paid for the mine and the trucks and the plumbing for the perfect pile, every extra cent per pound just flows straight to the bottom line. Bro. And that's why FCX stock is so volatile. It's basically a leveraged bet on the global economy.
But that has to work both ways.
Oh, absolutely. If copper drops a dime, that $415 million just vanishes. And right now, their costs are actually pretty high. They're projecting net unit cash costs of $1.75 per pound for 2026.
That does seem high.
It is. And that goes right back to the mud flow in Indonesia. When your biggest and best mine is running at half capacity, your cost per pound shoots up because the denominator, the pounds of copper, shrinks.
So they are inefficient at the moment.
Temporarily inefficient. They expect that cost to drop down to around $1.25 per pound once Grasberg is back up and running. And if they can get costs down to $1.25 and copper stays at these record highs, well, the cash flow machine is going to be printing money.
So if we wrap all this up, we have a company that is essentially a proxy for the physical world's ability to keep pace with the digital world.
That's the perfect way to frame it. You have the age of AI demanding this exponential growth in power and connectivity. And then you have the reality of the Earth. You have mudslides, chemical reaction times, labor shortages, all acting as the brake.
It makes you rethink the future, doesn't it? We always look at the trajectory of computing power, Moore's law.
Yeah.
And it's this perfect line going up.
Right.
But geology does not follow Moore's law.
No, it does not. You can copy and paste code. You cannot copy and paste a copper mine.
And that brings me to my final thought for you, the listener. We're all betting on this AI future. We just assume the data centers will get built, the models will get smarter, the grid will hold up. But after going through this report, I have to ask, is the real limiting factor for human progress actually going to be silicon? Or is it going to be how fast we can heat up a pile of rocks in New Mexico?
It's the constraints of the material world. We can dream as big as we want, but at the end of the day, you still have to dig the hole.
Something to think about the next time you plug into your phone. The cloud is made of copper. Thanks for joining us on this deep dive into Freeport-McMoRan.
Always a pleasure to dig in.
We'll catch you on the next one.
Yeah.
Stay grounded, everyone.